this on? Yes, right? What's up, everybody?
AYI Acuity increasing its quarterly dividend by 17% to 20 cents per share. That's Alpha Yankee India, AYI.
Thanga! What's up, Adrian? Struck? What's shaking? We're freezing our asses off over here, Struck. Excuse my Yiddish. All right. So it looks like Intel, if I heard correctly, warned, which is interesting. Big insider buy, YYAI. Let me see what Intel did here. Intel CEO says chipmaker missed a lot of opportunities. CEO says can't get enough supply to meet orders. GameStop, Cohen bought 1 million shares. That's what the action was about. GameStop active this week. 1 million shares, 21.35 GME Cohen. Stock's not doing anything with that. Was that like no news? Known news? Do they know about it? Possibly. Is that why? YYAI. I don't know this name. That's up a little. Oh yeah. What a piece of garbage that is. Intuitive Surgical. That's a great name. Up in the after hours. Off a 9 or 2. They reported, yeah. I didn't know they had earnings today. So Intel, it's going to be interesting because, it's had quite the run. And they have an excuse here for a little profit taking, but I still think they come back and buy it at some point, as we've been seeing with a lot of these names that are in favor now. But you got to respect that it's, for Intel, this has been quite the rally. Overshot here, upside niners. They kind of, we're seeing a lot of this now, right? They're front running numbers in a lot of different names that they're excited about, especially on the cyclical side of things. So we got to be careful. Capital One Financial, they reported. Looks like they missed, I don't know, guidance over there. That's down 12. Wow. Where's that now? Capital One. Yeah, so look where it's at, right? Like, you see this overshoot here? And now you're lingering over here. Probably a decent opportunity longer term once it's digests. And I think that's it. So ISRG was the Alcoa. What did Alcoa do? It's amazing. You're excited to see Alcoa. Alcoa up. Let me take some of this stuff off my chart here before can't see anything. I'll leave the 90s up. What happened to PP? What is Mario? Does somebody hack Mario's account? What happened? Let's fix that. What's up? Is he talking to me? No, I'm on delay too, so. This delay is awful on here. I can't talk to you guys. It's a shame. It really is just so frustrating. I ask a question, it takes 7 hours to wait for the response. Anyway, whenever this gets out to somebody, I'm better off beeping somebody. Somebody got their beeper on them? Give me a heads up if you guys can see the screen and hear me, please. Whenever you get this message. Let me lower this block. We don't need them anymore. Jules is doing well. She's a little pain in the ass at times. She wants all the attention, but she's doing okay. Thank you. Okay. All right. So we'll get rolling, and I'll save some of the chit chat and back and forth to after we get through kind of the updates. So again, we don't get frustrated by the lag, and anybody watching on recording can, a lot of people like to tune in for the first 10, 15 minutes, get an update, and then hit the road. All right. So we have some earnings out. Interesting. We're getting earnings season hot and heavy getting underway here. You had the banks, which in itself was interesting because you had JP Morgan, and it might be more than just earnings there. You have Trump suing them. So you got other nonsense going on in JP Morgan. But down to a downside niner here. So maybe an opportunity. All right. You could see got close to a couple niners here, found a low here. Niner nailed the low. And here you got a niner trying to find some support. The other banks, again, it's been name by name. Goldman has been one of the better performers. All right. Citigroup came in a little bit, not a whole lot. You would like to see these banks kind of digest a little bit here, coming off a decent move that they've had. What's the other one? Bank of America, which, I don't really pay too much attention to. You got a downside niner there. And Wells Fargo, you have a downside niner. All right. So overall, a little digestion outside of Goldman off the bank earnings. Next week, we start to get into what I like to refer to as the heart of earnings season. You get all the big wigs. The reason why I think it's more important to us who pay attention to the flow and stuff like that, the next 2 weeks, okay, because of the impact of the names that are reporting the impact they have on the indexes, a lot of times you'll see hedging and or stock replacement in everything, right? Because even though that a stock you may own is not reporting, if it's in a group where one of these big guys are reporting, it's obviously going to have an impact, have an influence, right? So you see a lot of hedging because of that. Once we get through the next 2 weeks, that's when you start to see, slowly you start to see the flow start to clear up. A lot of that hedging, a lot of that big size that kind of gets you excited, but you got to take with a grain of salt, diminishes, and you start to get a more realistic tape once we get through the next 2 weeks. Again, call it the heart of earnings season, right? So again, it gets difficult, right? We're coming off a week where you had bank earnings, OPEX, a big OPEX at that in Jan, right? So you had no edge from the flow at all, in my opinion. And now we got to deal with some big name earnings over the next couple of weeks. Today was an interesting day because they focused on a lot of these heavily shorted names, more of the speculative names. And these are names that earnings really don't matter that much. They're squeeze plays. A lot of times it's retail activity there. So you can trade these things, right? You don't want to hold them through earnings. Okay, flow is never a predictor of earnings. Okay, nothing is a predictor of earnings, in my opinion, anymore in this game. And you guys have heard me rant about that. But, some of these under the radar type names kind of can march to the beat of their own drum, in a sense, right? They don't really move around with the indexes too much. And if that particular day they're squeezing and they're active with flow, I'll get in the middle of them, even though I don't really trust any of the flow over the next 2 weeks. Right? That's kind of what I did today. I played 2 names, made a little bit of money. Again, a lot of these names, unless you hold them, you're not going to make a score unless you get really lucky. I played more than 2 names today, but Omex I played. This is a name similar to TMC, a lot of you know, right? These deep dive mineral plays, whatever you want to call them. So this TMC has seen flow. Hasn't been a tough hold. You know, I traded a couple times, made money once, and took a scratch the trade before that. So at the right spot, it's worth, you know, taking a peek and maybe rolling the dice to try to hold for a couple of days and see some follow through. But net, it's been really choppy, like a lot of this stuff has been, and we'll get into that a little bit more. So this Omex, for anybody who's looking for kind of a sleeper in the group, probably more speculative in the group. Many of you may know the name from Flow off the last run, had a nice move here. You know, around this level here, you kind of can manage your risk here, right? If you don't see some momentum and it kind of lingers here or even heads south, whatever the case, you get out of it, right? You're not looking, unless you know something about the name that I don't and it gets you excited. It's not something you're putting a ring on its finger. You're just looking for the flow to create momentum. The other name I played today is Funko, right? Another name I've taken a stab at a couple of times. I've never had any success with this name off speculative activity. Again, today for a day trade, made a little bit of money. What the hell else did I play today? I don't know. It's irrelevant. But these are the type of names that saw some flow today. And if we see these names active next week or at any point next week or the next 2 weeks, you know, at the right spot, they may be worth a look if you're looking for something to play. Okay. For everything else out there right now, and again, earnings being the real reason, we're going into earnings season, so I really don't trust much of the flow, as many of you know. The stuff that I like and I want to look for opportunities in could use a rest and are kind of in the midst of reporting right now. Okay. And you know, you guys know, I mean, this cyclical trade has been more than just the small caps, but the small caps has been kind of my baby, right? It's been that part of this cyclical rotation that I'm looking to make a dent off, right? More than just kind of a trade. I've been in this trade, as many of you know, for a bit now, going back to whatever it was, September of last year. Even before that, I added some more length in September. And I intend on having exposure to the small caps for at least the first half of this year, if not the whole year. Okay. I want to be smart about it. I want to add on off pullbacks, right? Via TNA, which I like to play. I actually played TNA a little bit coming off this pullback and traded it. But ultimately, I want to kind of trade TNA off bullish sentiment signals. And if I can make some money doing that, kind of moving some of those profits into that core IWM position. All right, that's the goal. So the only way I'm looking to add exposure into this small cap camp is really off pullback. Okay, if I can get a more meaningful pullback, then I can add a more meaningful amount, right? But if we're going to deal with these short-lived kind of quick pullbacks, which is probably the more likely scenario right now, you know, I'm just going to hold my position and trade some TNA to get through it. Okay. And then as we come out of earnings season, you know, again, not earnings season, the next couple of weeks. And when I mean earnings season, we'll kind of see how things shake out, where things stand, right? If some of these cyclicals do cool off a little bit, right? And we start to see post-earnings flow show up at better spots, you know, that's kind of where I'm looking. I'm hoping what I haven't been able to do, which has been a little bit frustrating, but I'm okay with it, again, because of that IWM position. And guys, that's the reason why I do this, right? That IWM core position for me takes away from the FOMO of chasing stuff that I'm not comfortable chasing, right? So if I don't have any IWM exposure right now, I'm forced to put on weight at spots I may not feel comfortable with because I'm missing kind of what I've been looking for all of the latter part of last year, right? So this whole cyclical rotation, if I don't have this IWM exposure, I got to put it on in names, and a lot of these names have taken off already. Okay, so it's something over the last few years I've been doing more of, and it's been a huge help, just kind of relieving that FOMO for me. That being said, what I haven't been able to do is add much exposure in individual names, kind of names I want to tuck away in a sense, right? If you remember coming off the April correction, hold on a second. What I started to do was buy, kind of pieces of anything that looked interesting off flow, right? Even if the sweeper activity wasn't super aggressive or huge size, if it was just some action in a name that looked interesting to me, I would put on a small piece, right? Because of the setup that we were coming off of out of that April correction, right? Here, it's been a little different because it's not an overall setup in the whole entire market. It's like we've been talking about, it's strictly in that cyclical camp, right? So what's happened to me is that a lot of kind of the cyclical names, which are the more popular names, the leaders in the group in a sense, they just came out like a rocket ship early this year. So if you weren't in them, you kind of had to chase. And if you're not in them now, you certainly chase it, right? So I haven't really been able to get my hands on anything I really like name-wise. The only name I kind of bought and have been still sitting on, as you guys know, is this ERO, right? So it's the copper play, right? Instead of buying Freeport, I was looking for something kind of under the hood in a sense. This ERO caught some nice action and, was in that copper arena. But other than that, everything that I've bought, I've sold, right? So they haven't been names that I'm interested in tucking away. They've been more trades, right? And I've traded a few things, but nothing really that I have an interest in giving a leash to, if that makes any sense. So as we come out of the next couple of weeks of earnings, hopefully we start to see a little more than that. And to tell you the truth, outside of some of these leaders, okay, especially like in the commodity arena, there really hasn't been a whole lot. Okay. It's been mostly leaders and just, again, the underbelly of the market, kind of where I make a dent. They haven't really spilled over quite yet as aggressively, as clean into the underbelly. So I'm hoping, and I think that's still to come, whether that comes off some sort of pullback or correction when it shows up, or it shows up post earnings. Hopefully the flow will be able to guide us there. All right. So again, just giving you guys an idea of where I'm at, and kind of how I've been approaching this. Many of you know kind of my game plan. It's been the same for a while. But again, the more aggressive player out there would be more willing to shoot and fire at, anything that meets those cyclical characteristics. All right. Maybe they don't have to catch as much flow. They don't have to be a name you're interested in, as long as it's cyclical. And if you've taken that approach, you've killed it. All right. Especially again in the metals commodity side of the world. All right. So that's kind of the good news, and I think the most bullish part of this market. What's really interesting is, and especially of late, you take that out, right? That part of the market has saved this market. Without that part of the market, in all likelihood, we'd already be in a correction, right? So you look at like Russell, again, ripping here, right? After a little bit of consolidation. RSP, which we've looked at numerous times on this webinar. Very similar, has broken out. But you look at like ES and, just having trouble really putting momentum together, right? NASDAQ even more so. Right? NASDAQ still hasn't even made new highs, has been dead money since those highs in October. And then you look at a name-by-name basis, as we've been talking on these prior webinars, there's been a good amount of lost money in some of these names. Okay? Again, I really don't, I'm not in the business of making predictions, as you guys know. I really don't know how some of this big tech AI shakes out, right? I think the risk is that they unravel and it can become a problem for the overall market, right? What I'm not in that camp, as you guys know. I'm more in the camp that they will lag and they will underperform, and they're going to be really tricky plays, especially at certain times. But I don't think they fall apart. I think they hang in there at the least, and kind of the money to be made is going to be in the spots we've been talking about, especially off pullbacks. Okay. But again, that's just an opinion of mine, right? I don't have a crystal ball. I have no idea. Right? You can't feel too good about how some of these names have looked of late. The Microsofts of the world, even in NVIDIA, that's just been dead. Right? A lot of people complaining they've been holding an NVIDIA for the last few months and they can't make any money. The core weaves of the world, just a lot of those popular AI plays overall have really looked poor. Right? There are some exceptions, but it's like finding a needle in the haystack. And what I think that eventually that probably spreads out and goes beyond just mega cap. You start to see it in just some of the more large cap, what were sexy AI plays. Again, reason being that they're just too crowded. They're overowned. Right? It's got nothing to do with fundamentals. NVIDIA knocks the cover off the ball quarter after quarter. Microsoft, they're doing nothing wrong. Meta, the only thing supposedly they're doing wrong is spending too much money. They're printing money. Right? So it's fundamentals take you so far. Once everybody's in the trade, and we talked about this, right? Every institution under the sun, if they are bullish on that NVIDIA story, they're already in it for a long time now and probably capped out as much as they can buy. Okay? You can say that for Meta. You can say that for all the Mag 7 names, right? For a while now. And you could probably say that for a lot of the sexy, large cap AI names. And that's the problem. That's the problem. Okay? So we kind of have both worlds here to deal with in the market. And I think now we're at a point, right, where you have the cyclicals have really heated up to start the year. You got the Russell looking strong as all hell, RSP looking strong as all hell. Groups like the banks got overheated. Commodities, metals are still going, and it's not just a gold thing anymore, right? It's not just gold, right? You see silver's been even hotter than gold. Why? Because it's more cyclical, more economically sensitive. It should outperform gold, right? You're seeing copper heat up. Palladium, you name it, right? But at this point, and to state the obvious, even as they continue to print highs, they don't look tired at all. These things are overextended, right? I know, I'm not pointing out anything that you guys aren't aware of already. Okay? So if you're in these things and holding, good for you. There's no reason you should be selling. Okay? But if you're looking for new entries, it's really dangerous trying to find new entries up here. Okay? Regardless that we see them continue to make higher. And I've been saying this, I'm not just saying this now, I've been saying this for the past 2 months. all right, especially gold and silver. So, the opportunities, again, on a more tactical side come off dips and pullbacks, right? And I think the next sweet spot entry in a lot of these things we're going to come when we get a little more of a deeper pullback, market wide. Okay. But for now, we're kind of looking to grind it out, make some money while there's still momentum, and try to avoid, being forced to chase and get caught in that pullback, whatever that pullback may look like. All right. Now, here are some of the risk out there because of some of this stuff being stretched the way it is, and you just have to look at a chart to see that. You've got some stuff to worry about. Now, it looks like, because of the backdrop and how bullish it is, it looks like the risk is kind of what we just saw here in the market, right? Kind of these type of pullbacks. Shallow, they find buyers sooner rather than later, and it doesn't lead to a correction, all right? So barring any new news, and you always have the risk of it, that Iran, it could have unfolded a different way. That could have been a problem, right? Japan can unfold a different way. That could be a problem. So there's always the risk of it. But without something kind of going boom in a sense, we're probably going to deal with these type of pullbacks, these shallow pullbacks where you get kind of violent snapback rallies initially, and then we get the same type of tape that we've been dealing with for a while. And that's that low correlation, dispersion. They call it a stock picker's market, but at times it's a extremely tricky stock picker's market, right? Because as time goes on without a correction, it's like trying to find a needle in a haystack. Which stock is actually going to perform well on whatever day? Because you get this constant rotation, right? The heavily shorted names can catch a bid today. They may go dead for the next 3 weeks, right? And you kind of see more of that, exactly what we've been seeing. And that's usually what happens if you guys have been on this webinar. That type of tape usually shows up when you get correlation levels this low, right? If you remember, we talked about it, again, back here recently. And, we, off the little pullback, we had a little bit of a bump up. And guess what? We're right back to where we started again, right? So you're kind of going to get these shallow pullbacks and VIX pops. But right now, the way things set up, those VIX pops, probably you have a higher probability of seeing selling into those VIX pops, VIX selling, than VIX chasing, unless there's a new catalyst. Why do I say that? One of the things we like to look at is an indicator from Deutsche Bank. I think I'm showing it on this webinar before, but I'll try to dig it up here quickly if I haven't. I got actually a few interesting things to show you guys here. Hold on. Here it is. Okay. So this is at a Deutsche Bank, and this is their vol control fund sensitivity indicator. So I've been following this for a while, and generally what I see is when this thing is up near or north of 6, right? So especially when it gets up into these neck of the woods. But the higher this indicator, the more inclined that these vol control funds will chase VIX into strength, right? So buy volatility and sell equities off a VIX pop. When this is low, or especially when it's negative, a lot of times you see that at market bottoms. And what it tells you is that even if VIX continues to go higher, they become sellers no matter what. All right, so these vol control funds, when this is below 0, they are net sellers into any VIX strength, and they're buying equities. Okay, and as you can see here, even with VIX and even with volatility being as low as it has been of late, this thing is still lingering near 0. Right? So my read, again, of my experience in this indicator, is that what that's showing me is that there's still a higher probability that these systematic funds will sell into any VIX pop as opposed to chase it and buy it. Okay, for whatever reason. All right, so as this continues and you see this thing start to creep higher, that's when that starts to change, and obviously that risk comes and enters the picture. Okay, so again, that's why when I make a statement, I feel like we probably see more of these short-lived VIX pops and pullbacks. Exactly what we've been seeing, right? For several weeks now. This is why. Okay, this is why. Again, here earlier in the year, if you guys rewind, earlier in the year when I was a lot more cautious on the market, I mean, there were a lot of different reasons why. Cyclicals were being chased off a Trump election and a lot of other things. But another reason why was this thing was north of 8. All right, so any catalyst to get a pop in VIX or in a equity market sell-off of 2%, they will chase that price action, not sell into it. All right. So again, that's one of the reasons why I think we see a continuation of what we've been seeing, and with correlation this low, right? But what we got to understand is, it becomes more difficult when you have more bulls in the picture, and that's what we have now. Okay, if you look at like some of the main indicators, and you guys probably have seen a few of them. Here's one we like to look at on a short-term basis, short-term sentiment comp. This thing was approaching 80, right? Highest it's been since the April lows. Okay, this recent wash took us down to around 40. We bounced. I think we're around 50-ish right now. Okay, so we got a little relief short term, but coming into the week, we were up near 80. So again, you just got this added risk of a drawdown. Some of these more popular indicators, like you guys know of from BOVA, right? So they had their fund manager survey come out for January. Here's what it showed here as far as investor sentiment. Okay, global investment sentiment. So hitting the highest since July 2021. Right? This took a long time to get here. You think about like from the April lows, we were all the way down here. This really started to heat up over the last couple months. Okay, and cash, which when they're looking to raise cash or sitting cash, that's a bullish contrarian signal. When they're deploying cash aggressively, that's a bearish contrarian signal. You can see how low cash is right now, according to this survey. All right. So you're seeing, the more we go on without a correction, the more of these things you're going to start to join the kind of the caution camp. Right. And it's just risky that you have to acknowledge. So, and the reason I bring that up is even though we've been bullish and we're still bullish on a good portion of the market, if you get caught in just even a sentiment rinse, it can sting. So you want to try to avoid it. And that's why I say like our best entries, almost always anyway, but especially now, are going to come off minor pullbacks, right? Especially if you're more of it on the tactical side of things. And I feel like the next best entry that we're going to have is when we get kind of, may not even be a 10% correction, but more of where that short-term sentiment comp kind of gets likely below 10, at least below 20, right? So something similar to what we saw here in November. All right, so it won't take a whole lot, take a down week. But that's kind of what I'm looking forward to, is when we get some of these shorter term signals to light up green, and then feel a little better about taking risk as opposed to just running into this market here with correlation this low, and then every day I see another major indicator starting to heat up. Here's another one here. Oh, these are from the survey as well. All right. So here, a large majority has not taken out protection against this big stock market drawdown at the lowest in a long, long time. Right. And on the flip side of that, investors taking higher than normal risk. Right. Even you start to see that really heat up as these cyclicals and small caps have really come to life. Risk appetite, which is a good thing, but at a point where you get stretched, where things kind of been running for a while, market a lot of times likes to catch people off sides, right? And as you can see here, this is all sides, right? When you see stuff like that, this is all sides. Retail has kind of been heating up of late. There was some stuff out of JP Morgan this week that showed retail here. They bought the dip on Tuesday, of course. All right. So they're right back to aggressively buying dips. This is something else too. Again, I think this can be bullish, big picture, but on an intermediate term basis, in the market, just from my experience, when you see stuff like this, the market doesn't make it easy on the upside. At the least, it doesn't make it easy on the upside. All right. So this is global fund flows. All right. They're throwing in the bucket, getting long. Okay. Again, ultimately, like I've seen that not always show up at the end of rallies. Okay, it doesn't mean it's a major top. I've seen it show up early in rallies, right? The investors are starting to actually put money in the market. These aren't traders, but a lot of times when you see these spikes, again, the market can get tricky, especially the more crowded stuff. Okay. So again, here's the problem, right? The problem in simple English, not to make you guys dizzy, is it's a tricky tape, but it doesn't mean it has to be an overall bearish tape. It can be tricky for on both sides of the fence. And that's annoying, all right? If we can have our way, we would like it one way or another. If we know it's bearish, kind of like early 2025, okay? I really didn't like what I was seeing. I went to all cash. I even was selling stuff, runners. And I probably shouldn't have done that in hindsight, but I was that nervous, right? The reason I was nervous is there were a lot of things that I pay attention to screaming warning, right? Screaming caution. So I don't mind that. I'll go into cash and sit as long as I need to sit. We don't quite have that here. Right? We don't quite have that here. We had that show up in October in some big portions of the market, like we talked about. But overall, we really don't have that here. Right? A lot of this market is still, big picture, really underowned. Right? The financials are still underowned, in my opinion, big picture. On a shorter term basis, if you look over the last 4 weeks, they've been aggressively, like funds, hedge funds, institutions have been aggressively buying the financials. Okay. But over the last 5 years, ridiculously underowned compared to big tech. Insane. Not even nowhere on the same planet. Okay. Industrials, same thing. Over the last 2 weeks, there's been some real FOMO in the industrials, especially from like hedge funds. But overall, right? Again, this stuff signals more pause, right? Digestion in these things on shorter term time frames. Where's here. So that's generally what I'm getting at here, showing you guys. tricky tape where you get these VIX pops, sudden VIX pops, and the rallies, not really healthy participation. You really got to get lucky on a day-to-day basis to find where the momentum is at. And then the risk is you get these VIX pops and equity sells, and pretty much everything will sell, right? So that's a tricky tape. Here's one of the other things that prevent a correction. Okay, and I'll compare it to what we were seeing earlier in the year, which was the complete opposite last year. Here are financial conditions. All right, this is where we're at right now. Okay, so just the big picture backdrop economically is a completely different animal. More liquidity than ever. You got financial conditions as loose as they can possibly be right now. Really difficult to get a legit correction in in equities as a whole without something going boom. I think I told you guys the example. COVID was a good example, right? Financial conditions weren't this loose. Is this COVID? This might be COVID, right? Oh, no, that's 2021. Yeah, this might be COVID. No, that's not COVID. Never mind. But COVID financial conditions weren't this loose, but were loose. Okay, and then COVID showed up. All right, I don't care what's loose, what's bullish. If COVID shows up and shuts down the global economy, equities are going lower, right? There's not a question about it. So if you get that exogenous event, obviously, anything like that can create a correction. But by itself, like with financial conditions this loose, this easy, I mean, this is screaming buy cyclicals. This is screaming buy economically sensitive names. Right? Because it's a favorable backdrop economically. And then talk of you got this tax bill, and you got Trump doing housing QE, and then you got Rick Reeder possibly running the Fed. You got even that much more of a bullish backdrop. Now, again, it's more priced into equities, right? It's more priced into cyclicals now, as opposed to last October when we started to talk about this. But it's still, you have that backdrop that raises the probability that dips find buyers. Okay, here's where we were, to give you an example, early 2025. Look how aggressively financial conditions started to tighten as we topped out then. Okay, they started tightening from September so basically where we're at now is like August, September of 2024. Right? And all this tightening entered the system. That would be like this happening over here. I keep doing that, and I download so many different things. All right? So the backdrop is still favorable. That's why I think pullbacks are the opportunities in the things we want to own. Right? Credit, credit really hasn't been doing a whole lot. It's like credit spreads we look at. Remember we were looking at them choppy. They've been tightening a bit, but really choppy. Credit default swaps, choppy, but still record tights. Just recently, even credit just recently has started to tighten again, tighten further. For whatever reason. I don't know. Maybe housing QE, right? Who the hell knows these days? All right? But again, when credit is tightening, you're going to find buyers in risk assets as a whole, equities as a whole, not sellers, right? A lot of times you see credit start to widen out, even as equities continue to rally, and that brings on selling. And you can see here, of recent, something happened here, right? So, and last but not least, as far as on this front, times you're getting kind of that VVIX diversion that we like to look at. right? So we got it again here recently. Into early this year, you could see even as the equity markets were grinding higher or sideways, VVIX was catching a bid, right? VIX was catching a bid. So that kind of gives you a heads up that it's not a healthy equity rally. Right? It's not the type of rally you want to chase. It's the type of rally you want to sell into. And then what happens? We get a pullback like we just did. And after the pullback, you see the unwind, right? Unwind. And it kind of resets things. So that's what we're dealing with right now as far as the mechanics of the market. A couple other things that were interesting too. Goldman was talking about this. Trader from Goldman. Yeah. But I'm looking for the spread. There was something really interesting I wanted to show you guys. Oh, here's another, little bit of a warning sign. Funding spreads. Just telling you the smart money is taking some leverage out of the system. They're not chasing here. Okay. And sometimes they do, right? We're looking at this red maroon line, brown line, whatever color that may appear to you, right? Blue is the S&P 500. Okay. This is an aggressive chase. This is pushing your chips in, ramping up leverage to take advantage of upside. Okay. You can see almost like a parabolic blow-off move. Okay. Then you see they start to take off leverage early, even before the market topped out. That was another warning signal, by the way, earlier in 2025. Okay. They're doing that again here. Right. So then they're not chasing here. I couldn't say that. They're not adding leverage here. They're taking risk down here. That's what it's showing. I want to show you. I didn't even talk about systematic funds because they're filled up with equity longs right now. I wanted to show you. There was one chart from Goldman that was interesting. Hold on, it's right here somewhere. Come on, wait. It doesn't matter. Is this it? Maybe it's in here. No. It was just a short chart showing that when these two things are there's some space widely spread out, you get kind of this low correlation price action that we're seeing now. I should have geared it up before we got on here. Is that it? No. Oh, this might be it. Hold on. No, right? No, that's the other one. It doesn't matter. It's not that important. I might have included it in my write-up. It doesn't matter anyway. Here's an update from the CTA crowd. Here's kind of the big level, 66, 57 SPX. All right. So they're sellers in a flat tape. But again, you need some of these levels to crack to the downside for them to become a problem. And you can see from that vol control indicator, they're just not there yet. I don't know what I did with that. I know I posted it. Doesn't matter. All right. So that's where things are at. That's why I wanted to start off just telling you guys exactly what I'm doing, right? So you get an idea of how I'm approaching what I'm about to show you, and then kind of get in the weeds here of things are still bullish, right? I still like everything that we've liked since October, and dislike most of what I disliked since October, just dislike it a little less. All right. But the stuff I like has, come a long way. You got more bullish sentiment in the picture here. That always brings some risk. Oh, Sharpies, good call. All right. So then you got Sharpies too. Yeah, I wouldn't say it's a sell signal, but this is the first time Sharpies are hedged since the April lows. Where's Friday? I can't keep track of the days here. I don't know what day is what. Hold on. And we got another Sharpie up. Oh, I don't know. Did we get an update tomorrow? Here, Sharpies. So this is what Sharpies look like. Net exposure in all equity indexes. All right. So they got some hedges on. Right now, again, we start to see this. We start to see this, right? What happened here, happened here. Let's just say I'm not going to look to put on more long exposure, right? I'm probably going to cut some exposure that I have on, to tell you the truth. So I don't want to see that, obviously. But as it is right now, this is more normal to where Sharpie should be, right? An equity market that looks like this, Sharpie should be somewhat hedged. You know, they should have some hedges on. You don't want them to hedge aggressively from here. Now, what's interesting too, if you try to get an idea of why they're hedged now, all of a sudden, it's not because of hedge funds. Remember, they've been kind of taking the other side of that trade. So every time hedge funds get short, they get long. Right? Hedge funds get long, they get hedged. Hedge funds aren't long. Okay? This is probably what's concerning them. Small specs have really started to creep up here now again. Right? So down here, this blue line, this is just the S&P 500. It's even worse if you look at all the indexes. You can see the little guys have been stretching it out here. Here are hedge funds. They haven't been doing a whole lot. And if you look here, Sharpies are slightly hedged in S&P 500 futures. NASDAQ is where they're more hedged for obvious reasons. You know? And again, you see, like, listen, not especially the newer trader and the more retail trader, they don't like to pay attention to this stuff. They kind of just want to go out there and gunsling them all day long, right? Weekly calls, front month, buy or sell, stonk up or down, as they say. But you see how that can pose a problem, right? How that can become a problem in this type of tape. You just don't hear about it on social media. The guys on social media who were pounding the table on NVIDIA, right, and showing you their fundamentals and the stock is going to go up another 200% from here, you know, they stopped talking about NVIDIA. And now, you know, before you know it, they'll be talking about FCX, Freeport, right? After another leg higher. That's just the way it goes. And that's why you can't pay attention to them. But the market's not always that easy. The beauty of corrections, when you come out of a correction, a lot of times the market, the first leg of that rally is that easy. Right? Where you can get money, where you can make money on the long side blindfolded. But there are times, again, when more bulls enter the picture, that if you're going to truly trying to find an edge and make some money in this type of tape, you got to be aware of these things, right? If you're in these large cap, mega cap AI names, and listen, there was a time to be in them, all right? They're not my type of names, as many of you know. So while a lot of people who were killing it in call options, I was twiddling my thumbs and looking to find underbelly names to day trade. Okay, because I don't buy Microsoft and all these names. But that time has come and gone. So if you in Microsoft over the last 6 months, you've lost money. Right? You've lost money. Not only that, you missed whatever opportunity there was on the long side in this market. So, that it's worth paying attention to this stuff. And it may not be necessary to get into the weeds as much as I do and some of the others, but you need to acknowledge this stuff. I think the more important thing, guys, what happens is, unless you're a seasoned trader, you don't really need to act on all this stuff we look at, right? It's more of when things line up in your lane, that's when you want to be ready to fire, right? That's the stuff you want to be aware of. And on the flip side, when the wind is going against you in stuff you like to get involved in, that you have to acknowledge and take it easy, right? In other words, you don't have to, if you're not comfortable buying small caps or it's not your thing, you don't have to force yourself to buy small caps, but you just can't buy the mega caps the same way you were buying the mega caps in the past. I think that's what becomes the problem, right? Not losing any money is a lot better than getting lumped up. There was a recent McElliott note. I didn't dig into it. So funny you mentioned that. I'll look at it after the market closed today. I kind of glanced at it, but the takeaway from what I seen was that kind of what I touched on. You got this VIX pop, and there were sellers right into it. They're still not chasing that VIX pop, right? And the reason why we're looking for that is because right now you have a VIX short position in VIX futures, right? And that's the risk. So here's what I'm talking about. Let's see if I can find it this way. There we go. Do I have the other one that shows the short? I want to see the short, but this is Sharpies. All right, so you see this here? Those are hedge funds shorting. There's another chart that shows it better. All right, so hedge funds are shorting VIX. Okay, that's what that's showing us. And what happens, eventually they get caught. Now, the timing of that is the difficult part. Okay, because I've seen it, and we've talked about this in the past. It can get a lot more extended than it is right now, right? We've seen VIX even trade lower than it is right now, okay? So that's where some of these other things we look at. McElliott gives you good insight on it. That vol control fund sensitivity indicator is some good insight on that. That's kind of why we're paying attention to it, because at some point, okay, these VIX shorts are going to get squeezed hard, and you're going to get a obviously outsized vol move. Okay, right now, again, barring some unforeseen news that gets investors really rattled, what we're more inclined to see is what we've kind of been seeing of late. All right, and where VIX can possibly even overshoot in a short amount of time, but they're shallow, a lot shallower. Let me see if I get that VIX short on. VIX short. No? Is this it? No, this is that's too low. Anyway. But that's kind of what we're looking at here. That's kind of what we're looking at here. And by the way, Sharpies are long VIX, right? So they've been long VIX futures for a bit now. Every time it gets down to lows, they add VIX futures. I can't believe I can't find that other chart. Oh, here's the other right? Now, this is revamped. The old bull bear indicator, okay, for those of you who may be wondering, the The vulnerable bear indicator we know of over years now. That's a major indicator. I mean, you've seen some major tops and major bottoms off the signal. This is the revamped version that Hartnett has worked on. Now, he claims this is, as far as being more tactical, quote unquote, trading. When you back test the new indicator, it's been more efficient. The old indicator, you don't get enough signals. So that's the problem. Everybody wants action, right? You have an indicator that doesn't signal anything for 2 years, people lose interest. So the new indicator, which back tests well for tactical sell signals, where again you want to sell rips, this is this. Okay, the old Bover Bull indicator, major top and bottoms, is not on sell signal yet. For anybody who may have been curious about that. Here it is. Is this it? There we go. I found it. So this is from the Goldman Trading Desk. ETF percentage of tape average to start this year, 32%, nearly 4 pips higher than average run rate for the last 8 years. Yesterday, we saw the spread between ETFs and top of book liquidity really widen out. And that theme continues today despite a broadly tape. So when you see these things widen out, top of book liquidity and ETF percentage of tape, you get this kind of low correlation tape that we talk about constantly, where randomness, right? A lot of random price action. That's the best way to explain it. Random price action. Now, again, if you look at the memory space, SanDisk, WDC, STX, and Micron, there's no randomness. They go up every freaking day, right? If you look at the metals market and gold miners, silver miners, any miners, they go up nearly every single day. So there's no randomness there. So you have these pockets of momentum that have gone nuts, right? But they're kind of outliers. The majority of the market has been extremely random. And what I mean by that is you have days where you look and SMH maybe higher. You see a couple semis running, like the memory semis ripping again, but you got, ARM lower, AMD higher, NVIDIA lower, Intel ripping. You understand? That's the randomness. Now, yes, it is a stock picker's market, but I think that, it misleads people, that term, because, it gets those cocky traders to, oh, I'm a good stock picker. You understand? It's a really difficult tape because there's no logic behind it. There's no logic. You'll see things like here in an example. Here's a name I've been holding, by the way. Don't ask me why I held this one, but I held it. I'll tell you why I held it, because I sold everything else and I figured I hold on to something. And of course, the one I held goes lower, right? The ones I sold go higher, but that's another story. EVLV. You had this just like this fade here, no news, lighter volume. Really, there was no reason for it. Some of the smaller cap names that it usually trades alongside it were flat or higher. You understand? But again, it's just that random action, random price action. So it becomes tricky. And what happens is, like, outside of those memory and metals and those hot groups, on a day-to-day basis, it changes. The banks have momentum one day, the next day they're dead or go lower. You understand? Today we saw these small cap squeeze names. Very easily, you can see them sell off for a couple of days from now. We've seen it. You look like, name by name basis. Now, some of them have had higher, some of them don't. Net, they've been acting better. So here's the thing, right? So let's say, just hold through it, right? I'm holding EVLV, TMC, just hold through it. Yeah, that's the easy solution. The problem is you run the risk of holding through it and then getting caught in a drawdown. Right? So you're taking more risk by holding through it. That's the problem. You know? Now, again, if it's one or two names, or especially if you got some profits, that's fine. But you start to, all of a sudden you're adding names, you put on weight, and you're holding through randomness and then get caught in a drawdown. It doesn't make sense. You know why? Because the reward is not worth that risk. Where we want to get aggressive, or I should say a lot more aggressive, is not in that type of tape. You want to get aggressive in a tape like you're seeing in the memory names, in the metals. Obviously not here, but you understand what I'm saying? Where there's a tailwind at your back, where correlation spiked, and now it's unwinding, and you got a huge tailwind at your back. So it's the complete opposite. You understand? Or, just, again, better entries. Like for me, I think in a lot of stuff right now, the entries, the spot these things trade at is just as important as the flow for me in a lot of these names, especially the more speculative names. If it's at an area where I feel like it can manage risk a lot more effectively, I'll take a shot. And, sometimes I'll hold it for a few days if I need to. But if I need to chase a move, because again, the randomness, it could just trade lower for a couple of days. Here's one that frustrated the daylights out of me and then went high. RCAT. Here's what I was trading in. So I bought RCAT at a pretty decent spot off flow, decent flow, and I got caught in this Schimmerdigger. Okay, popped, sideways, shake out, come back, shake out. It shook me out, and then did this. So again, if it was just RCAT, and I like the action, I like the name, right? And I'm just holding RCAT, and that's all I'm holding, and maybe I wanted to hold through a couple of shakeouts and get lucky and try to catch this. Right? But I don't want to treat everything I own that way, because it's just not worth doing it right now. It's not worth doing that right now. Other names have been, especially on the more speculative end of things. You could be sitting in dead money for longer than you would like, and then a pullback comes, right? And you sat in all this to lose money. I guess it depends how you look on it, right? Me, I don't think the reward is worth the risk here. I'm not getting that aggressive, putting that much weight on here for the reward to be worth sitting through that risk. That's the way I look at it. Yeah, and if you remember the conversation Sunday we had, for those of you in the steam room, I think the best way to look at it, if you haven't been frustrated by this price action, what I'm referring to, this randomness out there, you've been fortunate, and prepare to be frustrated. You understand? Prepare for your hit ratio to come down compared to what we were seeing in the fall last year, especially trading these more speculative names and stuff like that. But as you can tell, I still think it's worth playing. Unlike early 2025, I still think there's opportunity out there. Right? There's opportunity to be had out there. We've got to be more prudent about it. You just got to be smarter about it and be aware of the risk. It's not a raise cash situation here by no means. By no means. And again, coming from a guy who I would love a pullback. I would love a correction. Even owning what I own right now, I would give back money. That I would want a correction here. Knowing what we know right now for the spots of the market, that we're paying attention to. The other stuff I really don't know. Because you got names like this too. And these are names I like. So you guys know, like Microsoft, NVIDIA, when those names get crowded, I want nothing to do with them. Okay, I don't even look at them. I don't pay attention to them. They catch flow. I ignore it, right? There's no edge in them. But you got names like this that, these were studs. Like this is good-looking AI stuff. That's the way I look at names like this, CRDO, right? Crazy growth in the AI sector. It's been going higher for a long time, and more bulls find out about it, more and more bulls position in it, and it gets crowded. It gets crowded. And this is what you got to deal with. You understand? So I think what we're starting to see and going to see more of is now these type of names likely get caught in what we have seen some of the larger mega cap names get caught in. Right? Like I'm trying to think of some off the cuff here. CLS is another stud. Like there's nothing wrong. These names are the best names to own. When they're breaking out, catching flow, nobody's talking about them. This is the epitome of what I think we should strive to look for on a day-to-day basis in the market. Right? Quality, mid, large cap names, high growth names, profitable names. Okay. And the beauty of it is, when you don't hear anybody talking about them, when institutions start buying these things, it's so easy for them to drive it higher because there are no sellers. Nobody's in them. Right? When an institution wants to get involved aggressively in a CLS, it's likely building a position in the price range from 40 to 60, in a range we likely consider a home run in a trade. Institutions are accumulating in that range. Right? And that's why you see some of these crazy moves in names like this. When you get fundamentals like that. But, again, this is not new anymore, right? This is not new. These stocks are up huge over the last few years, and more people are involved in them. Right? And as players get a little skittish about AI, you start to hear some of the risk of AI, right? They sell the strength in these names and they move it and rotate it elsewhere. Now that you have a decent backdrop for the rest of the economy, the rest of the market. You didn't have that. Small caps were useless, right? Nobody had an interest in small caps a year ago. But now money's coming out and moving into these areas of the market. So I think these are kind of, you're starting to see the two names I pulled up. I haven't looked at them in a bit, but I think these are the names that, are starting to find some trouble, basically. It's not clean anymore. Like, look at this. Yeah. So, and like if CLS drops the ball one quarter, it's going to pay the price, right? If for whatever reason they don't like something CLS says out of the quarter, you're going to see what happened to Meta and Microsoft happen to a CLS. Let's see this one. This is another one that's been a beast. Look, this is still going. Okay. Just so I don't show you two that are already doing what I'm saying. Like, this is another name that, runs the risk of getting caught in that. Like it's been moving for a while now. I mean, this may be not as much, but you guys know what I'm saying. You know, again, the upside is this. Okay, but it's not there. They always don't look like this is insanity. They don't always look like this. You understand? Like this is a special situation. For whatever reason, excuse shortages in the space. All right. All right. So let's go through some names. We went through again cyclicals. I know they're not popular to a lot of you guys, myself included. Guys, I like growth. I prefer tech. The semis are kind of my favorite group. It's just now for good reason. You know what I mean? Like again, the semis, the cyclical semis. I think there was an opportunity in them. Now you got a little less of an opportunity. They've been running for a while. Look for pullbacks. We've seen a few newish names show up in the chip complex. I guess in the chip complex, but they too they're up. Up of recent. Here's one they're getting ready to report. Maybe you want to keep an eye on. CRUS, Cirrus Logic. All right. This, from what I know, I remember this name back in the day. It's more cyclical. Okay. We saw some action this week in this name. I think it's a chip stock, MRAM. And you can see, right? I mean, this has had a nice move already, a long way. But you see the action and the price action. This thing can chop around for a few days and then rip again. But these are interesting names. What's the other one? And Rambo. This honestly, I don't want to sound like a Monday morning quarterback because I didn't play it, but coming out of this was looking really appetizing here. Yeah, I think the risk was if maybe the semis cooled off as a whole, it'd probably trade lower with it. But look at that. Off this rip, and then you get this consolidation and just shot out of a cannon here. And like many of these things, they run away from you. They run away from you. So there's some of the newish chip names that have been floating around here. Again, if you like semis, I think you try to be patient and wait for a pullback at this point. That's what I would recommend. As far as build a position or whatever, you probably get some sort of pullback at some point. Maybe off earnings because they're kind of front running earnings here. Cirrus. Oh, interesting. I remember that about Cirrus. Is that still the case? A big chunk of their revenues Apple? Good call. I remember that about Cirrus. This one too, right? SWKS. Is that still the case with that one? Thanks for that heads up, Kashat. I remember that about that. All right, let's see. I see a few names on here. IOTPA. Well, I know PATH already. This is tough, PATH. This spot is not the worst spot now that it's pulled back. You got a ton of insider selling. The CEO selling like mad. So it's hard to really get bulled up when the CEO is selling a stock that's down from $100 to $10. I think what you have going for you in this stock is if they're looking to squeeze, kind of those squeeze AI type names. By the way, what I also don't like, you got every newsletter pump and dump jabroni behind this thing. Okay. Again, I don't want to talk you out of a trade with this because if you like it, I can see why you like it. There's just a few things I don't like about it. But the spot's not the worst spot here. Now that you had that pullback, you understand? So if you brought it up here, I would say wait for something like this at the least, and you got that. You know, and you got that, right? So that's kind of the case I'm making, is that these areas for an entry are usually a lot better. Like this one obviously was early, but they're a lot better than these, you know? So spot, you're approaching a decent area here. That's what I would say there. What was the other one? IoT. I think I know that one too, IoT. I think this is another one. Maybe you subscribe to that newsletter? I think there's a newsletter. It might be Altusha that likes both these names. That is touting both these names as takeovers or something. But same thing I would say here. You know, again, spot is a lot better here off this recent pullback. And you see, it's funny. Who brought that up? Super Gal. You see, it's funny you bring these names up because look, isn't it so interesting? Like, look at what these stocks have done over the last few weeks. Why? Why did this happen? You know what I mean? Like, why did these things sell off like this? It's just random. Random. You know? Random price act. I'm telling you, if you haven't really been seeing it, you've been fortunate. I see it. It annoys the living daylights out of me. I see it every day. And I hate it. This is software? Wait, Path is not software, is it? So there's software. Thank you. The software. Look, Path was heating up a little bit, it seemed like, right? I thought it was, is it AI though? Path? I thought it was an AI play. Software. Gotcha. That makes sense now. That makes sense. That's a group that obviously has come in a lot. I told you something you don't know, but you know, like you don't want to catch a falling knife in that type of selling because there's a lot bigger things going on than we probably know fundamentally. But I think if we see some aggressive call buying in them, they're worth taking a peek. I'll tell you one thing is worth paying attention to. You got like outfits like Bravo that are probably going to be sniffing around, and you're going to start hearing takeover chatter. So something to keep an eye on. It's going to be a little more difficult during earnings season, but if we pick up on some peculiar flow accumulation in any of these software names, could be some chatter lingering. We saw some buying today in a name that a couple of names which catches earnings. Team. This used to be a stud. Look at this thing. Oh my goodness gracious. Yeah, this was the software bubble coming out of COVID, right? Everyone was going to be locked in their house. Everybody needed cloud software for everything we were using. And you had this. Look at this move. And now these things are, nobody thought it was going to be this much pain. AI is providing the pain now. But these are tough. Listen, again, I'm kind of talking my own book here, but for us in the steam room, if once we get out of earnings and some of these report late, but Team, for example, reports next week. If you see accumulation, again, not just one order, but if you see an appetite in any of these software names, sweeper wise, it's worth taking a peek. I know I am. Now, again, it's got to be convincing flow. You understand? I want to see somebody keep coming back like they have conviction. I don't want to see somebody just taking a stab and nibbling in these things. Because, again, you don't want to be too early you would think the bulk of the selling's done already, but they still could be really tough trades. But if we see flow, definitely worth taking a deeper look. We got to get past earnings though. You can't trust this flow now. You can't trust this flow now. No way. One, you would have to hold through this earnings. You know what I mean? And, think about a stock like this, how much stock replacement, short hedging is going on into the quarter. So it's tough to trust the call activity in this stuff pre-earnings. I would wait till after earnings. Yeah, TTD is another one, right? This was another beast. Oh my God. Damn. How about Twilio? Has that got in too? Twilio was the Twilio trying to hang in there, right? Twilio trying to hang in there. This is the stud. Like, if this thing can't find, look at this. If this thing can't find a bottom, like, this is the one, in my opinion. I can't believe ServiceNow has sold off this much already. But, this is a whole different bird here. This is a whole different bird. Like, this still looks totally normal in ServiceNow. But this is probably one of the names I would look for. Because you got a stud here. The CEO is a stud. The stock is a stud. But things are bad when this looks like this. What else? Struck is talking about selling Newmont early. I mean, get in line. Anybody who's touched these gold miners is killing themselves right now where they sold, no matter where. I can't believe this thing took another leg higher like this. But keep in mind, these things have been dead money, guys, for a while. Like, look at this. Okay. Since 2020, I mean, this has been complete dead money with the occasional squeezes. And you just got a major breakout. I was basically a year early, and I can't expect myself to hold. Like, I can't even be mad. Like, where I own these things? Right, Struck? You remember where I own these things? Like, here was the ETF. I'll show you where. What? Oh, weekly. Look what the weekly looks like. That's because it's levered. Oh, come on. Let me show you where I own this thing. Okay. I own this thing here. Wait. 2024? Oh my God. Here, the circle's still there, Struck. Look at it. That was my entry on Nugget. Look where I sold. That's where I sold it. But look at this correction here. Would I have survived that? Only if I was like the small caps now. I have to be willing to survive that. Like, I got to be okay with it. So I got to give up these gains to catch the bigger move. Kind of what I'm willing to do with the small caps right now. Look at this entry, guys. If I held the Nugget, $27. It's at $2.75. The other one I had at the time with Nugget was JNUG. Do I have a circle up here too? Oh, no, I didn't leave a circle up here. No, I didn't leave a circle. So I bought them at the same time, basically. So JNUG was over here somewhere. because I was kind of buying the breakout of that downtrend it was in. Do you remember Super Gal? That's over a year ago. That's a year and a half ago now. I think, well, the miners, it depends. I sold them differently, though. Because what happens is when I sold Nugget and JNUG, I rolled half of the money I had in those into GLD. So I got out of the miners and I put half of those funds in GLD and then held that for like 4 months and then got out of that. But, you're talking about massive, massive breakouts here, right? Like you want to see something in gold, all right, for technicians out there, and I'm no technician. I'll look at the weekly. I remember us talking about it when we were long. Look at this. Massive cup and handle. Look at this. And then break out of that, and look what you got. And like I remember only a few of us at that time were talking about it. I got trolled for buying the miners. How about that? On the Thursday webinar, I had people trolling me. Dude, you don't buy the miners ever. You just buy GLD. The miners always lag. I got trolled to death. They called me dude. Unbelievable. So, yeah, spilled milk. But that's what I'm saying. I can't even now. It's been a year. I can't get mad anymore. This move is psychotic, though. Psychotic. Like this is like you guys know Puff Puff Pass. This was like kind of one of my favorite silver miners. This is the old Silver Wheaton SLW for those of you who remember. Look at these names. They're still ripping. They're not no signs of even slowing down here. And I like the mineral plays, the metal plays, I like that group. It was a big Trump group. Remember the conversations we had? It's just this explosion. Obviously, I didn't see this type of potential. Obviously, I would still be buying them or in them. But insane moves, insane. We got as you guys know, there's one STEAMROOM member who's in up to his eyeballs, owns like 100 to 150 different miners, and is killing it right now. VS, as many of you know in the STEAMROOM, he's holding a portfolio of like 100 different miners. And printing money. Oh, the flow was nuts, Al. The flow was nuts. I'm telling you the truth. I'm not a gold guy. I'm not a gold miner guy. It's like oil to me. I don't play that stuff. The only reason, and I remember the only reason I played it is because it was an unbelievable contrarian setup in something that started to look really good, and the flow was, it was too obvious. You couldn't miss it. The flow was nuts. What's up, Raul? I remember this name. What's the symbol now? Is it B? Yeah, B. So this is the old Barrick ABX. When we were buying the miners, I remember this thing got tattooed. Newmont. Tattooed. They started buying like some of the big guys. And, all leaps. It was all leap buying. All a year out, they were accumulating. So, in hindsight, always, but, those are the opportunities, guys. You know what I mean? Again, I'm hoping the small caps are even half of this move. You know what I mean? But, very similar setup. Very similar. Let me tell you something. Everybody right now, not everybody, because I know a few guys I know who are in a lot heavier than I am or ever been in the small caps. But most of mainstream media, most of your gurus out there are skittish at best of small caps. Best. They still, even if they're bullish, they favor large caps. Oh, I like small caps, but I've been burnt in the past. You know what I mean? It's a gold trade. Same shit. It's the same shit. I will always be a dude. But as if things start to click like we talked about throughout this year, if Trump gets things to click a certain way, you got a ton of upside in small caps. Ton of upside. Ton. And mid caps too, but small caps, because they're hated and they're heavily shorted. You know what I mean? And I told you guys, like, where I made all my money, I kid you not, like where the biggest dent I made was coming out of the 2000 bubble. Right? So the whole tech bubble, I was still wet behind the ears in this game. I was gunslinging. I'd make money. I'd get caught in a correction, give it all back. But luckily, I never levered up. I never went on margin. So I never blew up accounts. I hung around. You know what I mean? But when the tech bubble blew up, I sidestepped that completely because I had none of that stuff. One, I wasn't big enough to have much of it anyway. You know what I mean? Because I fully got involved in this game like 98-ish, 1998. So, the first couple years, right? You're getting your feet wet. But after the tech bubble blew up, many of you know I told you this story a million times, or as the tech bubble blew up, the small caps started to break out. And nobody had a clue. Nobody had a clue. You turn on CNBC, they're all talking about these internet stocks. Buy the dip. Should we buy the dip? How much lower can they go? Is this a top? Is it not a top? That's the conversation every day. Meanwhile, underneath the hood, exactly what we're seeing now was happening. There were full-fledged bull markets breaking out all over the yard, led by small caps. And I really got aggressive. Like I was even a broker at the time, right? So I built my business around small caps coming out of that 2000. And like 2001 to 2004, and I think 2003 was my big year, if I remember correctly. I think it was 2003. I just had a killer stretch there. So again, I was like everybody was all caught up in tech and taking hickeys. I was fortunate enough to not be involved in that and deploying all my resources into, mostly small caps and, even the stuff that I was buying, like sector wise, name wise, there was so many small cap breakouts that, like, if you wanted a healthcare medical name, there were small cap breakouts all over the place. Housing, small cap breakouts all over the place. I remember even the Chinese internet name, guys, the Chinese internet, Baidu. Baidu? Baidu, I think my average cost was maybe $10 on Baidu. Could it be? Baidu, Sina, and Sohu. Those were the 3 internet companies back then. Sina and Sohu, I bought at $2 and $3 at the time. They went bananas. But that's what happened in that stretch. You know? So this probably, again, I don't know if it's better or worse, but if you avoid an AI bubble bursting and there's still room, you know what I mean? Maybe you get more participation that way. I don't know. You know, some people I talk to think it would be more beneficial if AI blew up. The market would correct, and all those resources, all that liquidity would go to small cap cyclicals. You understand? So short term it would be bearish, but that would be the buy opportunity of a lifetime. Again, I don't targets. I'm not trying to be a wisest. I don't pick targets because what do I pull them out of my ass? Where am I getting a target? What am I breaking down the price to book multiple for you? I'm not doing any of that shit. You know, like trades, I find spots where I want to start taking profits, what I'm looking for, and stuff like that. This is more kind of feel and time for me. You know, that's the only way like I've been able to play these type of plays. So like right now, at the least, I'm trying to milk the first half of this year. You understand? At the least. Like if we don't see a correction and we get into late spring, summer, let's say summer, you know, I might decide to chisel down my small cap exposure. You know, and then hope to add when we get that correction. Now, that can bite me in the ass, but I'm at least trying to, you know, short-term goals the first half of the year before I take any profit. So what I'm saying is I'm willing to sit through a pullback or a correction no matter what first half of the year. So I'm willing to give back those profits. You know, but again, target, I have no idea. You know, I think you have a very similar, it's no comparison. Gold and small caps are 2 completely different things, but you got a similar setup here. Now, major breakout, nobody involved, nobody wanting to be involved, all the fundamentals and everything you would need for small caps to be bullish haven't been there, and they're finally starting to show up. And, you know, that's what makes me think like some of these names are big pieces of the small cap index. Like BE, Katos, you know? So these are names, I mean, they've exploded here. They've exploded. But it can get tricky too, name-wise, because these things can cool off, and the regional banks and energy, the cyclical part of the small cap group, that can heat up. And that's what's happened, you know? So hopefully, fingers crossed, at some point when the street becomes a real believer in small caps, you're going to start to see it spill over and breakouts all over the place, in small cap land, all over the place. And what we should start seeing, the fundamentals support that. So in other words, like the big knock on the small caps is that the fundamentals are awful, right? There was a big portion of that index losing money. Now that percentage has come down. So there's a smaller percentage of those names losing money. That trend should continue, right? So the fundamentals improve, and you start seeing small cap names that are profitable with solid growth. And those are the ones you want to look for, because those are the biggest winners. Somebody gave me a symbol of something else you guys could follow here. SPSM. Supposedly what this is, profitable small cap 600 ETF. Check me if I'm wrong, but that's what I was told. SPSM. Yeah, super go. And this tape that we're in now, this low correlation tape, exactly. You know, and I think what the beauty of what we went through here is that the part of the market that we're bullish in, that's where the money's been made, right? Because again, the small caps look like this, right? IWM looks like this, but if you're in SPY or NASDAQ, you haven't really been doing anything here since this October high, right? Again, this October high wasn't just your normal high. You guys remember the webinar. Most of you remember, you know, I was doom and gloom. I didn't sound too good because the hot parts of the market, AI related, spec related, it got crazy. But what we saw is this, even though it wasn't much, blew out a lot of that froth. You had all those mega cap AI names get hit over the head, and you had all those speculative names correct 50% off the highs, just off this. Right? I mean, like, look, here's what Meta did in that span. Right? So I just showed you that pullback on ES, and look what Meta did. Microsoft. All right? I got a lot of these AI related names really got hit over the head. So this little, what looks like a little pullback in the major indices, a lot of good came out of that. And that's where, after this dip, coming off that, that's where cyclicals really started to heat up. And then we got into January and they just exploded. But this bounce here, cyclicals led. That was the change off this October top. Nail, I own Nail and I want to own more Nail. I'm in Nail and I want to add. I haven't added yet. But I'm gonna try my darnest to add. I might add in smaller pieces now, just to play it safe. This is I think the last part of that cyclical group that just really hasn't come to life yet. And because it's got its own issues, but as we talked about, this is like Trump's new baby, right? So like if you're the rare earth mineral play, right? If you recall, the reason that was a sexy story is because that was out of Trump's mouth every day, right? He was so focused on it. Next thing you know, he's coming into the market and starting to buy publicly traded companies. So housing is a big, big thing right now. Like he's determined to rig this housing market by hook or by crook. And we already heard, right? Housing QE, they're ready to do. So that's why I have an interest in anything, not just home builders, anything related to that in a sense. You know, we haven't seen the sweeper activity really confirm it yet. But you know, it's a different group, right? It's not like semis. Like when they want it, you can't miss it. They're gonna bomb AMD, they're gonna bomb NVIDIA, they're gonna bomb ARM. You know, the options are a lot less liquid. So you start to see an uptick in flow. You don't see that exaggerated flow come in. But we really haven't seen them come in yet. Yeah, builder, again, you have earnings, so that's the problem there. But again, this is an interesting name, right? This too, here, Home Depot. You might look back at this entry in Home Depot and say, holy Jesus. But and listen, for the record, I've been saying this for a few months now in Home Depot, so hasn't really done anything special here at all. But if this group gets its act together, this thing is going to be at the top of the list. It's almost like this, right? If Boeing can't muster a rally in this environment, it should quit the business. Okay? Like if Boeing can't get its act together to stock in this environment, it shouldn't even be publicly traded anymore. And you're really starting to see the momentum build here. But yeah, so to answer your question, now I already own. I bought some to just kind of like the IWM. I didn't buy obviously nearly as much, but I bought some nail, and I'm looking to add not just to nail, because nail, the levered ETFs I don't like to hold too long. Usually, like here's what I like with IWM. I first bought TNA. So it took me a while. I bought some TNA, then it ran, then it pulled back, and then I added a large chunk of TNA. Okay. And then TNA rallied. I held it for a few months. You guys remember, I sold TNA and rolled that money into IWM calls. You understand? So that's generally what I'm looking to do with nail. I'm trying to time nail to get a decent trade out of it, and then move those funds into either names or something that's not levered too much. I don't know. Honestly, I don't follow the company too much. It's software, so that could be the problem. I think that's the problem. Probably it's software. That's the only thing I can think of. Like you got some of the other studs, that have sold off, Crowd, PANW. So I think it's just software has been there was some PANW buying recently with some time. It's just been a tough group. And these are the cream of the crop, right? As this is cybersecurity. So even they have been tough. DD and Rogue. DD is a cyclical, so this should do well. I don't even have to pull it up, and it already is. ROG. That's Rogers, right? Yeah. Again, these are two names. You're in the right neighborhood. You're in the right neighborhood. ROG, if I'm not mistaken, is like a Comcast, right? Similar. So yeah, they're never smooth trades. They're tough trades. But if you're looking for a rotation to be in that spot, you're in the right spot. And DD, no doubt. Chemical, that's early rotation. No doubt. Ooh. Is DD the one they're looking to spin off to? Wow, you got a major breakout there too, DD. Another one. Big breakouts, guys. You're talking about major breakouts. Here's the weekly. Major breakouts. So, you're asking me? What the hell I know? Honestly, all I can tell you with Bitcoin, Sahil, is what we were talking about. Liquidity-wise, this is what it should be doing. Honestly. Solely off liquidity, this is what, if you would ask me, based off liquidity, what Bitcoin should look like, this is what it should look like. I think the low should hold. Off liquidity, the low it shouldn't go much lower than here, unless liquidity rolls over, but it's not yet. But if you look at like some of the liquidity indicators from like Howl and stuff like that we look at, that's the takeaway. Let me see. Do I have? I think I posted one of Howl's. He posted on Twitter. Hold on. That's the. I could have just searched it. It would have been a lot easier. Oh, here. All right. So you're looking at the orange line there. This is from what's his name? Mike Howell. You see the orange line pulled back, and it kind of just look. I downloaded another thing. It just kind of stalled here, and that's kind of right. Is this Bitcoin? I think this. Oh no, this is liquidity curve, a yield curve. So like you had this leak in liquidity, right? So this makes sense. Now, again, syncing up where liquidity is right now, it looks like just some chop, range bound trading. So if you like it, it's probably worth looking at here, Sahil, for trades. But again, I'm just telling you from liquidity. I'm hearing all sorts of other shit that I really don't know anything about. Longer term holders aggressively dumping, because Bitcoin's losing kind of the luster that it was created for. I don't know. You know what I mean? I have no knowledge of that yet. But based off liquidity, I think if you like Bitcoin, you look to find an entry and sell rips. The data, exactly. The miners are completely, they made the shift. So now they're treated like data centers. I kind of like, we were talking about this, right? So I kind of like this little guy as a tuck away plate, not hunt. Hive. But again, these are tricky for me. Not Hive necessarily, but the other ones. Of course, again, you have a lot of bulls in this group, guys. There are a lot of people bullish. Again, all for good reason. It makes total sense. But there are a lot of longs in this space, right? Like these names, you have a lot of people sitting long these names. Cypher. So this price action makes total sense to me. I don't know if they can break out here. Like even Irene's like my favorite one of the bunch. It might stay kind of like what we were talking about, Sahil, right? You get these trades from spots. Can it get going from here? It's going to be tough. It's going to be tough. Certainly possible. But, Irene's one of the better ones fundamentally, too. You think it stays range bound to you and then eventually breaks out? Like that would be ideal if you kind of like Irene longer term. You almost want to see it stay range bound for a bit and then break. Kind of wear out some bulls. Yeah, well, I think that would be the best thing longer term, honestly. That would be ideal if they could do that. Yeah, exactly. But yeah, this is, I consider like the stud of the bunch, Irene. I'm kind of biased though. It's my favorite, flow wise. It had really the best flow. A lot of us made money trading this thing a few times. So we're kind of biased, but I like Irene too. I like Irene. Irene and Wolf. Irene, Wolf, and Hut. Okay, that's it. I picked three. Irene, Wolf, and Hut. Those are my three favorite. But again, how they treated me makes up a big portion of that. Yeah. I mean, you hear the CEO from Irene talk about business, and oh my God, you want to load up immediately. Business is booming. So again, the only knock is, this ridiculous move gets the attention of a lot of people. Look at this move. I mean, that's impressive. Okay. Maybe it's not SanDisk, but that's quite the move. And it might be SanDisk percentage-wise. This was a big move. Coming off debt. So really impressive. And kind of this too, right? Both upgraded Alco. But it's just the same premise, same premise. Just could use some quiet here now. And it's gone quiet. So that's good. Micron, unbelievable. All of them. They're just insanity, man. Insanity. Look at this. This is a big stock, Micron. This is not Irene with a couple million share float or whatever it is. Micron's a behemoth. You know what kind of money it takes to get Micron to move like this? I don't think you guys realize how much buying it takes to get Micron to move like this. You're talking about huge buying for this stock to break out in this kind of manner. This thing's a monster. Look at this. Oh my God, man. Look at the monthly. I mean, it looks like a bulletin board stock. Micron. Look at this. Boggles my mind. Here's look, WDC. Yeah, you know what it is too, though? See, the fall is going to come in these things, no doubt, and they're going to go quiet for these things. What happens is when they're hot, they stay hot for a while, and then when they go cold, they stay cold for a while. Big cycles in these type of names. But just incredible, man. This is 1990-esque, this type of 1999-esque type of move. Big companies. This is not, again, these aren't small float names. These are big names. And, by the way, talking about squeeze, here's the new Carvana, I'm calling it. Lemonade. Look at this thing of late. Heavily shorted and really got hot. And speaking of Carvana, today there was probably a good $50 million worth of Feb calls bought in Carvana. I'll show you guys this and then I'll pack it up for the night. Okay, look at this guy. $7 million sweep. Feb 425s. Wait, there's more. $5.3 million. $6.6 million. This is all today, my friends. This guy's a piker, 500,000. Oh no, that's it. So where was it? Are these? Oh, this, yeah, and then they added after that. Look at these trades. 6.7 million, 6.6 million, 6.9 million, 6.6 million, 6.5 million, a million, and a little piker for 100 grand. And there was more than that after that. See, more came after that. Look at it. 7 million after that. So you have earnings coming up here in February. So it catches earnings, right? So I'm sure it's related to that. But other than that, I don't know. You know, all the way up here. Now, I know Carvana's heavily shorted, you know. So maybe somebody's really stuck. I mean, it's big money. Possible. This is definitely the best trade ever. Right? Coming from near bankruptcy to this year. So worth keeping an eye on, even for trading purposes. Those of you who trade Carvana over the next few weeks, because again, off the top of my head, probably I would say easily 30, 40 million in calls. We'll see what the OI changes look like tomorrow, if anything really closes. But you know, we're keeping an eye on. And you know, this thing kind of has exploded here a bit, but watch it on dips, lemonade. And you got a lot of shorts in pain here. Anybody know the short thing offhand in lemonade? Roughly? Anybody keep tabs on it? There's got to be a lot of pain here, short. A lot of pain. It feels like this was back in June. This feels like yesterday we were talking about it here, the break. But really heating up. You know what? Another name that's got going of late. I know a few of you like it. Longer term, RKT bumped up into a niner here. A little bit of a tug, but again, they've been buying dips in this RKT. Play on mortgage rates, tied to housing. The Trump QE should help. Yeah, Moderna, there's been crazy action there too, but not all clean. Not all clean. But look at that. You know, shorts have been hanging out in this thing and really haven't been squeezing forever. Like this was the last legit squeeze in Moderna. But, you know, this, you know, when you see this, this is what the other side looks like. You know, the other side of this, you never know when this shows up, but the other side is never pretty. You know, that's why when names do this, I just stop watching them, you know, because the majority of them, that's what they look like on the other. I like Hertz. I haven't bought any yet, but I might buy some. Again, as a tuck-away name, okay? So the way I would treat it is a tuck-away cyclical lotto play, okay? But I like Hertz, and I like the spot here. I like the spot here. You know, I think you got short squeeze working in your favor. You got cyclical rotation and cyclical bull market working in your favor. I know they've had headaches, you know. I don't know what the rental companies are doing as a whole. They've looked ugly for a long time. But if you get a market that prices in a better economy and that starts to take shape, you would think these things trade higher. And Hurts down here, risk reward wise, I mean, makes sense to me. You know, it makes sense. I'm going to buy some tomorrow. You talk me into it. When do they report? Should I just, maybe I'll buy some now, and then after they report, I'll buy a little after it. When is it? Feb 19th. Because I kind of like this spot too, you know? And just tuck it away. Who knows? Maybe we catch one of these bad boys. That'd be nice. You talk me into it. I don't know. Is Ackerman still in it? That's a good question. I don't know. I don't know. But yeah, Hurts, I'm going to buy some tomorrow. I'm going to make a note of it, and I'm going to buy a little tomorrow. And then after earnings, I'm going to add a little to it and then sit tight. There's been some flow in the name, longer-term flow. But if the flow starts to heat up, that's when, you know, I'll get a little more aggressive. But right now, I'll treat it as a tuck away. A GLSI, I don't know this name. Breast cancer? Oh, shit. I don't know this name. Yeah, I'm not familiar with this name. Lumber Liquidators? That's still around? No, it's not around. Lumber Liquidators? That can't be around, is it? No. Oh, is he talking about a different stock now? Oh, he's talking about a Canadian rare earth, I think. What kind of questions, Raul? You want to? Can you hit me up on Twitter, or you want it more private than that? Isn't there like messages on Twitter or some shit? Can't you like Can you DM me on Twitter? Who the hell's texting me? I'm starting to get the sniffles. This weather's starting to bite me in the ass, I think. Yeah, hit me up on Twitter. I'll check it out. Are you going to message me tonight? I'll make sure to look. No problem. All right. Any last questions before we wrap it up? I got to pop 2 Tylenol. I got a pounding headache, and I'm starting to get the sniffles over here. It's going to be freezing. And I heard we're getting like 20 inches of snow. No, 20 inches? Yeah, I think 20 inches. Something like that. 2 feet of snow? Unbelievable. Sahil, are you getting snow by you? I heard you guys were going to get some snow and ice. 12 inches. Unbelievable, huh? Yeah. What are you going to do? Wintertime. Defense and drone plays. Again, I've traded them. I don't have any now. I've fooled around in this ONDS. There's been decent flow in it recently. I played it early on here, of course, and didn't even get involved here. That's probably been one of the more active names. RCAT, I took a scratch on, so I didn't even make money on RCAT, but I played it down here. I just wasn't patient enough to catch the move. This Katos, I always have liked this Katos, you know, but it's moved big here. This Katos I've liked for a long time. It's a good little company, Katos. And there was another speculative name that caught a sweep. Oh, DPRO. That caught a recent sweep. DPRO. Let me check it out for you. There was only one sweep, but I think it was half decent, if I remember correctly. Here it is. July calls, 2 sweeps. July 10s in DPRO. So a couple decent sweeps there. DPRO. Yeah, I mentioned that earlier, right? All of them are. I know Katos is. Unbelievable. But they look at Struck. Stop it now. Okay? It's too late in the day to bust my chops with Kathy Woods. I'll hunt you down over there. All right, everybody. Stay warm, stay safe. We're supposed to get some bad weather out there this weekend. All right. And I'll see you guys next Thursday. Steam Room members, obviously. We got another day in the week. I'll see you mañana. Thanks for stopping by, everybody. Enjoy the rest of the night.